Okay, 7.2 is then preparing a balance sheet. So we prepared our income statement. Now we're going to prepare a balance sheet. Your one learning objective is just being able to prepare a balance sheet for a service business organized as a proprietorship. So just like the income statement, we're going to get the information to prepare a balance sheet off of our worksheet. So we're going to look now at our balance sheet columns. Remember, a balance sheet shows assets equals liabilities plus owner's equity. We're going to start with our heading. So our who, what, and when. Now for this one, we are using simply the date because this is going to show the specific balance of those accounts on that specific date. Notice how it is set up. We have our assets and our liabilities just like the accounting equation. Assets are on the left, liabilities are on the right. So assets, the heading is going to be in the middle here. And then we're going to list all of our asset accounts over here. And then we're going to list our balances of those asset accounts. Liabilities, we're going to have our heading is going to be in the middle. We're going to list our liability accounts. And then we're going to put the amounts of those liabilities. Notice here we have our total of our liabilities, and we've simply added those two columns or those two accounts together to get our total liabilities. Okay, now we will see the next section is going to be our owner's equity. Our owner's equity, we have our capital account. And then we have the balance of our capital account. We're going to single line rule. We're going to add our liabilities plus our capital to get our total liabilities and owner's equity. And then we're going to look at our total assets. We're going to add up our asset accounts to get our total assets. Notice our assets equal liabilities plus owner's equity. It's set up just like our accounting equation. Now, here's going to be the difference. If you noticed on that last one, and I'll go back to it, but if you notice, they had nothing about drawing on our last one. Here's how they figured out that number. So here's our owner's equity section, but they've broken it down for us. So here's our capital at the beginning, $2,000. And then we took our net income minus our drawing, because remember, drawing is money that the owner is taking out of the business. So even though we had a net income of $3,162, we have to subtract the drawing that the owner took out. Okay, so we're going to subtract those two numbers to get 2012. That means our net income is actually $2,012 after that drawing was taken out of the business. We're going to simply add those two numbers because this was at the capital at the beginning of the year, plus the capital that we have received, or plus the income, I should say. That's going to give us then the capital at the end of the month. Okay, and then that's where we got that 4,012. So I'm going to go back. Here's that 4,012. That's how we figured out that number. This one just doesn't show us the whole calculation. We did this calculation in our head or on our calculator instead of showing it like we did on this one. All right, so out of your understanding, list the four sections of a balance sheet. We're going to have our heading, and then we're going to have assets, liabilities, owner's equity. Number two, what is the formula for calculating our current capital? This is important. We need to know this. You're going to take your capital account balance and you're going to add to it your net income minus your drawing account. That will equal your current capital. All right, go ahead and move on to 7.2, work together.